Welcome traders to another Tickmill trading update video with me, Patrick Munnelly. Want to take a look today. We're going to look at bonds. We're going to look at the 10-year notes. We're also going to look at the proxy ETF, the TLT. And we're going to wrap things up looking at the Russell, some interesting setups to review today. So let's get into it. So starting with the TLT, we've seen this bullish impulse to the upside, subdividing nicely into 5 waves here on the 4-hour time frame. And as we traded into the prior cycle high here, just above or just into that 160 level, we got some momentum divergence, and we are seeing the anticipated pullback corrective move now. So the current swing structure gives a potential ABC equality objective, which would see us trade back down into 92. 42 on the downside. Now, that represents a move just below the 38.2% retracement, which would be an ideal corrective zone if we're seeing a higher degree wave 2 complete for an extension to the upside, for a further upside advance. Certainly, at a minimum, we'd now be anticipating, as long as we hold support, that we see at least another corrective leg to the upside in the TLT. So what I'm looking for is any pullbacks now into the 92.40s. We've got the ascending trend channel support coming in there as well. And like I say, just sub that 38.2% corrective move from the advance, from the lows that we saw into the back end of last year. So watching for bullish reversal patterns there. I want to engage on the long side. Initial upside objective is going to be at a minimum the 50% retracement of this initial leg to the downside. Now I want to pay close attention to price action as we test that area, because there is always the potential that we do a double correction, get a deeper corrective move to the downside before trying to resume for another leg to the upside. If we can get through there and through the B wave high at 97.20s, then we can start to think about a break through the price cycle highs, and then I'll update with upside targets once we have our potential C wave low in place. At this stage, close through 89.40 would be a bearish development, suggesting a resumption of the weekly down trends. Moving to the notes, the T-notes, similar type of scenario. Just slightly different here. We have the 38.2% retracement from our daily advance, again subdivided nicely into 5 waves, coming in the 38.2, 110.09. We have an equality objective versus the 112.26. What I'm looking for here is a 1, 2, 3, 4, 5, 6, 7, 8, 11 swing cycle to complete into that 110.20. Now from there, again, I watch for bullish reversal patterns, want to engage on the long side, targeting move back into the high volume node, 111.30s, through the corrective trend channel resistance. And again, we could see an upside, a resumption to the upside for at least another leg of correction to the upside, an equal leg to the initial advance that we saw off the lows. But as with TLT, I'll be paying close attention to the 50% retracement of this C wave, as we could do a double correction from that area, and I will update in due course. But certainly if you get a signal at the 110.20s, you want to be risk-free by the 50% retracement of the C wave, because that's more often than not is a high probability zone where we could see a correction ensue. Moving to the Russell, using the futures contract here, and a couple of interesting opportunities developing in the Russell. Currently, we are tracking a correction versus, again, a nice impulsive advance off the lows here on the daily time frame. So moving to the 4-hour time frame versus the 2003 potential B wave high of a C quality objective 1844 on the downside, with the 50% retracement of the advance off the lows at 1860s. So I want to pay close attention here, bullish reversal patterns to engage on the long side. And again, we'd be targeting initially a 50% retracement of the C wave leg, which will take us back into the 1920 and the potential corrective trend channel resistance. So if we get rejections there, then again, we could be looking for another leg to the downside. But by that stage, 1844 to 1920, we've already got about 80 points of profit in that trade. So certainly, again, you want to be risk-free trading into that 1920 zone. Alternative scenario is that we hold this current swing low, technically We have completed a three-wave move here. It would be a little bit premature, but there is the potential. What I've been watching for is any breach of the trend channel as the first signal that we may have a tradable low in place. And what I'd be looking for then is a test of our potential B wave high for a pullback that finds support into the 1940 area to set a base for the next leg to the upside for the Russell. But like I say, for now, focus on the downside. We're trading within the corrective trend channel, and we're targeting a test of the C wave corrective leg. Be sure to join me today for the live stream. I'm getting going in about 15 minutes, 2:15 UK time. You can find that through the Tick Mill channel on YouTube. As always, traders, plan the trade the plan, and most importantly, manage your risk. Until next time, thanks very much.